Both Hang Seng and Taiwan, which were the outperformers of yesterday's trading session, are leading the losses today. More than 100 ballistic missiles and over 100 drones were launched by Russia.
The high is 25,078. We left off at 25,000 and 10.11 yesterday.
The acquisition will take MediAssist to have a total market share in the group segment to 36.6%.
We are at about 25.21. 25.15.
We are seeing good growth in demand for most of our products.
The cyclicality of the beast will reassert itself at some point of time.
The demand which we are seeing in India and in the US market, it's very strong.
But it's good to see the Nifty still hold on to the 25,000 mark.
So Citi estimates operating profit growth for Cholamandalam to be at 40% YOY in FY25.
ULI platform will be able to tap multiple sources to draw information about the borrower.
Almost flirting with the lifetime high levels, and the broader markets too doing very well in the session.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good afternoon. Well, that's been the day so far, and it seems the bulls are perhaps just waiting right at the edge to see if that all-time high is going to happen or not. We came very, very close to it, basically just about 6 or 7 points shy, but then there was a bit of a slip-off. This, of course, is Closing Bell. We are here with the last hour action. It's still not too far, but yes, we've slipped from that level. 11:30, it seemed that it was, a done deal. But then there's been a cool-off come through. Watch for the financials. That's where the action is. Banks and non-banks. We'll tell you more about it as we go along. But first, let me say hi to my co-host, Nigel D'Souza. Hey, Nigel. So what do you think?
Well, Surabhi, a few points away from those levels. But I'll tell you what, besides the banking names, there's a lot of action actually in the broader markets, particularly the NBFCs. You look at Chola Finance, that stock has moved to the high point of the day. So big move is what we're seeing out there. REC as well as PFC, both of them, big spike is what we're seeing. So the NBFCs as well, I think one part of the puzzle could be that, in fact, for REC and PFC, we'll address that in just a bit. There seems to be a specific issue that's playing out in that favor. But otherwise, for NBFCs, if you're going to see rate cuts, then their cost of borrowing as well will go down. Some of them do have a particular part of their mix that is from the banking space. So rate cuts will actually be positive. Look at Piramal Enterprises at the high point of the day. Chola Investments as well at the high point of the day. Some of these gold finances are doing well as well. Manappuram Finance is moving up as we speak. So good up move is what we're seeing on that name as well. But Surabhi, what else are you tracking today?
Well, I'm, actually, before we talk more about local markets, let's keep an eye out on the globe as well. Because what's happened is that while Asia had started off on this cautious note, European markets have actually picked up steam and momentum. Most of them are trading with gains of about 0.5%. So it seems that for the time being, at least, markets are willing to put all the geopolitics and all that, talk aside. Though, of course, crude does remain a watch point. So keep that in focus as well. Right now, global screens are looking quite okay as far as how Europe is trading. But the broader market action, again, the index is up about 0.4%. Yeah, that's the European picture. It's looking not too bad. The mid-cap index is up about 0.4%, but it's all about individual names. And, some of them are sort of screaming all over the place. An example would be Tata Elxsi. Remember yesterday, around the same time, we highlighted the stock, the up move started 8-9% higher. Now it's capping that with a 14% sort of a rise today. Rima will tell us in a bit, what could be perhaps some of the latest momentum factors that could be, triggering this kind of a move. Tata Investments is up 20%. Block deals happened earlier. Then there are other stocks. I mean, a CESC from the RP Sanjeev Goenka group, 9% higher. Dilip Buildcon is up about 7%. So MediAssist, obviously, on that acquisition has been up 9-10% right from the morning. So at an individual stock level, JSW Infra right now, at an individual stock level, there's plenty of action. Though, of course, otherwise, the broader markets, it's a bit of an even-steven position. And we need to see if we can get a sudden reversal, a sudden flourish in this last 1 hour, because right now the bulls have pulled back from the near all-time high levels. Reema, hi.
Hi, interesting news coming in on the ticker. Z has entered into a settlement agreement with Sony India. Remember, this is after the failed merger talk. So we'll try and get contours of it. So some settlement agreement has been arrived at with Sony India. The stock is reacting positively. It's a gain of close to about 6%. So that's a stock you should keep on your radar. But you know, in the Tata Group stocks, we're seeing divergent trends. So frontline Tata Group names, so whether it's a Trent, it's a Titan, Tata Motors, all of them are under pressure. Stocks are down between 1 to 2%, but mid-cap stocks in the Tata universe are higher in trade. Surbhi spoke about Tata Elxsi. Tata Tech is another big mover. So it's a vibrant mid-cap looking screen. The advanced decline ratio is positive. We've got firmly skewed in favor of the gaining side. But let's find out how you should position yourself in the last hour of trade. Mitesh is now with us for a few closing strategies. Mitesh, afternoon, the waiting game continues. Your thoughts on the day so far, the trends that you've picked up, and the stock calls.
But I think, it's a decent market given the fact that the sectoral indices are coming into positive and nothing negative has happened. So it remains a buy and dips, I think, because we've not crossed the earlier highs decisively. I'm not buying aggressively, but on the stock side, remains a long market. So that's how we are positioned. And I have a buy on HDFC Life with a stop at about 728. Look for targets of around 760, maybe even higher levels on the upside. That is the first target. And the other stock call which I have is a buy on Axis Bank. That's a buy with a stop below levels of 1170. And a trading target of 1200 can be looked at. And 1200 is also the level where a lot of call option open interest is there. So I think that will be a significant first supply point.
Okay, just want to go back and focus. Thanks, Mitesh, so much for that. We'll come back for some more ideas in a bit. Just want to go back and focus on the Z news. Now, this is what's happened. It's basically, I mean, when you read the fine print, the litigation overhang and the whole arbitration proceedings that were, going to be perhaps long drawn in the Singapore courts, that the companies have decided that they'll no longer sort of, be entangled in that kind of a spat. And I'm reading out from the statement. So Z has entered into a settlement with CMEPL and BEPL. These are, of course, the Sony entities, to settle all disputes in relation to arising out of the connection with the transaction documents entered into by the company. And they mutually terminate all such transaction documents, withdraw all applications, claims or counterclaims before the Singapore International Arbitration Center, and relinquish all rights to file claims or counterclaims against each other in relation to any of these transaction documents. And this will include the termination, the claim of $90 million, which was the termination fee claim that was sort of made by Sony on Z. So this is a huge respite for Z, that they don't have to slug it out in the arbitration, Singapore Arbitration Tribunal. And this, it seems that this $90 million overhang, that has also been settled with this. So this includes all damages, litigation, other costs incurred, and all other claims for costs of disposition, hive off, of liquidation of the businesses or any of the other assets. So basically, from the looks of it, the first page and the detail that I have sort of read into as of now, it seems like there is a overhang of all the okay, we've got Karan actually joining in. Karan, hi, thanks for joining in. I don't know if you got some more time to read through the rest of it. The first page gives the impression this is a relief that all the pending claims, litigation, what could have been long drawn out in the Singapore Arbitration Court, all that ends. But is there anything more to it?
No, I think this is just, mere respite that, there will not be any additional overhang in terms of costs for Z. And this will kind of, pave the way for better margin improvement. The management has already given a very strong margin improvement towards 18-20% on EBITDA. They have improved last quarter in Q1, and going ahead with the festive season coming in, you will see margin improvement. So I think all this will lead to respite in terms of valuation multiples, because I think there'll be a higher visibility of getting better margins because of this overhang going away.
Okay, all right. Karan, so, we're seeing a big spurt in the stock right now, up closer on 9%. Do you think this piece of good news is more than priced in now?
I think we have a target price of 210. I think fundamentally, the price, could move upwards of that. But it all depends in terms of margin execution and growth rates. So firstly, on the growth rate side, the festive quarter is going to be very strong this quarter in terms of ad revenue because this quarter you don't have the World Cup. Last year you had the World Cup, so a lot of spends were diverted towards cricket as a genre. And this quarter, rather during the festive season, you will see the GEC vertical coming back, and FMCG spends have also been increasing on advertising as such. So that's despite, and secondly, also the margin improvement. So, there have been constant efforts to cut costs and improve efficiencies. Losses for ZEE5 have been coming off. They've been very conservative or rather, kind of change the strategy in terms of how they want to, reach out to the market in terms of new content investments. So putting all the things into perspective, I think we do expect a very strong respite in terms of numbers as well. And as and when we see execution on numbers, you will see, further up move on the stock going ahead.
All right. So Karan, so that's the overall view with regard to the fundamentals. But on this piece of news, they've come to some agreement. If they didn't come to an agreement, was there a pending liability that they had to pay or some numbers, if we could understand that?
So I don't think any of the analysts, or rather even we had not factored in any kind of, number in terms of the liability to be paid. So I don't think there is any big negative or rather positive impact in terms of numbers as such. It's more of a multiple rating thing that this overhang, goes away completely. Now, 2-3 things to look forward would be, of course, NCLT is also being resolved. That NCLT Sony Z merger is also resolved. If you look at this, the claims have also kind of, now turned down against them. So 2-3 things to watch out for. One is, the pleas against these, with these IDBI banks and other things which they have, which are more in terms of, part of SL groups, the creditors that he has. I think those things need to be watched upon in terms of how those settlements are done, because that will provide more respite, in terms of overhang, for a potential margin hit. And even that contract with Disney, what they had, to buy out the TV rights, of the World Cup, which they kind of called off because the merger was called off. That is also something to watch out for. But net end, I think, these kind of news coming in will not change numbers in a big manner, but it will provide respite to valuation multiples for sure.
One more statement which says they're withdrawing all claims, including the 90 million termination fee. So they get some relief on that front, I'm guessing.
Yes, correct. So the termination fee goes away. So as I said, anyone, we are not factored in this termination fee to come, entirely on their books. So not much of a change in terms of estimates, but yes, valuation multiples will see the rating.
Okay, so it's a relief. It's a big relief that, that 90 million claim, which would have had to be sort of, discussed and fought over in court. Now it's all mutually settled and nothing remains pending. All right, Karan, got it. Thank you so much for joining in on short notice. That's helpful. Zee Entertainment hitting the headlines this afternoon on some good news. But speaking of news, let's focus on a CNBC-TV18 exclusive. Sources are telling us that LIC has reached out to IRDAI seeking a review of the surrender value regulations. Yash is joining in with the details. Yash, this is that proverbial ghost. It always rises. Well, so what's the latest?
We keep challenging us that the surrender value regulations will finally settle for themselves or not. And these regulations and the changes here keep challenging us in return with the multiple changes that they've gone through. The latest, of course, with just about 1 month, which is remaining for these regulations to finally get implemented. LIC, the largest life insurance company, has reached out to the insurance regulator seeking a review, not an extension to the deadline, but a review of the regulations altogether itself. Now, of course, the regulator in June came out with the final regulation saying that the surrender value, which currently stands at about 30% of the premium, could be increased to 70 to 75%. That is to be implemented for 1st October. And now LIC has flagged off 2 important parts of the regulation where they are seeking significant changes. The first one is with respect to the spread or the cushion margin which IRDAI has provided. Now, just to help our viewers understand, in the calculation of surrender value, one big element which comes into use is the 10-year GSEC yield, which, assuming trades at 7%, IRDAI had given an additional cushion or a spread of 50 basis points, which made it 7.5% for the calculation of surrender value. LIC's first task is to increase this number higher from that 50 basis points rather, which has been provided by the regulator. That's the first task. Of course, if that 50 basis points increases, the surrender value which the insurance companies have to provide to their policyholders also reduces in that situation. The second ask by LIC to the insurance regulator is to not hardwire the 10-year GSEC yield into the regulations, into the calculation of surrender value. What LIC is saying is that why to hardwire this 10-year GSEC yield, rather have a plan-based benchmarking of that interest rate when it comes to different plans and the investments made by those different plans and different instruments. This is, of course, if it happens, will be a big positive, because 70% of the investments made by life insurance companies in government securities happens in 30-year papers, where the GSEC yield is about 7.1% as compared to 10-year, where it's 6.86%. So if it goes higher, the interest rate for the calculation of surrender value, ultimately the surrender value paid by these life insurance companies will come down. These are two important asks by the largest life insurance company. We'll have to see how the regulator considers them, and if any changes does come through before these regulations actually get implemented in about a month's time.
Okay, thank you very much for that. Dipan Mehta, director at Elixir Equities, is with us. Insurance is clearly the sector of the day, Dipan. But before that, wanted your comments on Zee Entertainment and the news which has just come out.
Yeah, Rima, good afternoon and thank you for having me on your show. I think it's one uncertainty out of the way for Zee Entertainment, because this could have meant additional cost for the company. But at least now that we don't have to deal with that. And also, I think it was a trigger for some sort of up move in Zee, considering that the June quarter numbers were very impressive, where they managed to increase the operating profit margins, and from a loss situation, they went into solid into profit. So I think investors are reconciled to the fact that Zee will remain as a standalone independent media company, and it should be valued accordingly. And considering the kind of high valuations the entire market is trading at, this is one stock which is available at reasonable valuations. And look, media industry can easily grow at mid to high single digit. And from that point of view, there is a little bit of compounding of earnings. And gradually, I think in Zee Entertainment, if they maintain the kind of numbers and the profitability and the growth targets, then it could get a higher and higher PE rating as well. But a lot of uncertainty is now over in Zee, and you're going to value and assess the business based on its present form.
Okay. Deepan, hi, good afternoon. I don't know if you could pick up details, if you could hear Yash with the story on LIC now seeking some changes in the surrender value regulations, right? Even before they can be formally operationalized. What is your view on, we don't know what comes out. We don't know ultimately. The last change was that these regulations had become less onerous for life insurance companies, right? And then we saw the big rally play out. Now we don't know what's the final format. But as of now, what is your view on the insurers given the run-up?
Yeah, good afternoon, Surbi. See, I don't think it's quantified as well. And maybe it only get quantified and assessed once the final rule is out as far as IRDA is concerned from IRDA. So I wouldn't want to comment on what financial impact it will have. But on the whole, I think insurance companies are on a roll. Last 2-3 monthly figures which have come are very impressive. LIC in particular has been able to maintain or increase its market share over time. And of course, with the insurance companies and LIC in particular, this boom which we are seeing in the capital market, that certainly is going to help their adjusted enterprise value. And that will only get disclosed at the time of the quarterly earnings. So that could be a big positive surprise for the insurance industry and LIC in particular, considering LIC is the largest investor in the capital markets. So from that point of view, very positive on the insurance sector, and LIC in particular. Disclosure, we and our clients are invested in it. And it's a nice secular growth industry. And with all this financialization of savings, increased awareness, and maybe even some new opportunities like getting into medical insurance, which LIC is considering, those are all, I think, great options for insurance companies to consider. So investors should have some amount of exposure to insurance stocks. As I said, my favorite remains LIC.
All right, Deepan, when we have you, we can't not ask you about IT, and the mid-cap IT stocks that take your attention today are Tata Elxsi and Tata Tech. Well, we don't know the reason which explains this kind of an explosive up move in these stocks, but just want to highlight some data points. One, Tata Tech and Tata Elxsi have underperformed their closest competitor, KPIT Tech, in terms of a stock price performance and even actually in terms of growth rates. So this is the performance. While KPIT Tech has stolen a march over peers with a 60% return in the last 1 year, Tata Tech has been flat, no return. Tata Elxsi has given a muted 20% return in comparison. So stocks have been underperformers. For Tata Tech in particular, there have been 2 block deals. One took place today of about 1.2 million shares, but there was one even a few days back. And what we've learned from sources is that one of the large holders has cleaned out. They've sold their stake entirely, so that PE overhang could be out of the way. The third reason is that the competitor which they have underperformed, that's KPIT Tech, today has seen a downgrade from HSBC, because HSBC's view is that companies like KPIT Tech, which are fully exposed to automotive, may see slower growth because the R&D spend by large car companies globally is coming down. And therefore, it's better to play diversified engineering R&D players. Their top pick is L&T Technology, but I guess that logic applies, and therefore diversified ER&D players could perform a little better. And particularly for Tata Elxsi, remember, when they came out with their Q1 guidance, they had said that FY25 will be better than FY24 in terms of growth rates. Dipan, come in on Tata Tech and Tata Elxsi. Do you like any of them? Because stocks have underperformed compared to KPIT Tech.
Yeah, that's true, Reema. But when you put up that chart about the stock price returns, you should add the actual earnings per share growth. And if you see, KPIT's earnings growth has been phenomenal. I think it's the best in class, the best ever for a mid-cap company. And of course, I think it's focused on auto industry, where the tech spends remain very strong, and they have really, become a major leader in that particular vertical. So that explains the outperformance of KPIT. Also, the most expensive software company as well. And I'm perplexed, why one would try to switch out from KPIT into some of the underperformers like Tata Elxsi or Tata Technologies. And actually, we have investment in Tata Elxsi as a measure of disclosure. But there could be something in Tata Elxsi. Look, it's a mid-cap company. 1 or 2 large contracts can certainly swing the growth rate significantly higher, has a fabulous track record. And in a way, all these 3 companies, Tata Technologies, Tata Elxsi and KPIT, I still feel are in the right place at the right time, because the kind of upheaval and disruption taking place in the transportation sector, that we're nowhere close to the end over there. And the tech spending in that particular vertical still remains very strong as per our assessment.
All right, Dipan, I wanted to ask you about REC and PFC. There appears there is a news report that's giving them a bit of a fillip, with regard to infra funding. What's your view on both these 2 names? I mean, they're up 6 times, I think, in under 2 years. Any view on the stock?
No, Nigel, I think, they are attractively valued, but look at the earnings, there's a lot of volatility in their earnings. Compare them to some of the other private sector NBFC like a Bajaj Finance or a Chola, and you will see that why Street is paying higher for private sector NBFCs. But look, there's a re-rating story over there, and PFC, REC also can certainly benefit from higher government spending because most of their lenders and customers are also government organizations or PSUs. And there's a high degree of safety when it comes to NPAs over there. But I never could understand why there's so much of volatility in the earnings of these companies. Having said that, I think if you're an investor in these 2 companies, I remain invested. There still could be a space for these stocks to move up. Do keep in mind these counters have very low floating stock as well. So that also adds to their volatility and upswing. So I would remain invested, but from a fresh investment perspective, I think there are lots of choices in banks and NBFCs, and some of them are at extremely low valuations.
Okay. All right. Got that. Dipan, I guess, the buzz today is whether there will be some sort of not a rethink, but maybe a go slow or a slightly different, more lenient perhaps approach on the project financing norms. Remember, higher provisioning for project financing across the board, lenders, banks, NBFCs, all of them. Maybe, some reports suggest that there could be a bit of a go-slow approach over there. All right, with that, let's move on. The next stock on our radar is actually Granules. And here the story is that the sources are telling us that a surprise US FDA inspection is actually underway at one of Granules' facilities. Stock's down about 2%. Vivek got us those exclusive details. Vivek, what's the latest that you're picking up?
Well, that's right. According to our sources, what we understand is that yesterday there was a surprise inspection that started at Granules, the main facility, the top facility. This particular facility, the Gagilapur facility, which is in Hyderabad. And, today is day 2 of this particular inspection from the US FDA. Why are we discussing this particular development? This facility is quite important as far as Granules is concerned. It's a formulations as well as an PFI business facility and contributed over 70% of the company's revenue as far as Q1 was concerned. PFI is actually the pharmaceutical formulations intermediates business for the company. Remember, out of the total 16 ANDAs that the company has filed and is pending for approval from the US FDA, 11 have been filed from this particular facility itself. Remember, the company already has, the current number of NDAs that have been given approval from the US FDA and the company supplying products is almost 36. We reached out to the management of Granules. We are yet to receive a response from them, but it's an important development. At this point of time, there's not too much to read into it, but it'll be an important development to track. If there are any observations, what are the kind of observations in case any do come out at the end of this particular inspection.
All right, Deepan, thanks a lot for that, Vivek. Deepan, the stock's down 2%. Any view on Granules?
No, I think maybe the street is expecting some adverse outcome from the surprise inspection, but I must say that although the pharmaceutical industry compliance with US FDA has improved, so let's see what comes out of this particular inspection. But it's a sector and a company worth watching. I think after several years of stagnation, I thought that numbers were looking up for Granules India. And there are positive changes, incremental changes, improvements taking place in the US generics market, where competitive intensity and price erosion has reduced. And look, Granules is a massive, it's got massive capacities, completely vertically integrated. And from that point of view, it's a cost leader. So subject to, no adverse outcome of the inspection, I think that there's scope for Granules India to move up also, maybe a trading rally. And a long-term investor could look at it positively for next 2-3 years or so, with a lot of capacities coming on stream and overall improvement in global sales.
Okay. All right, Deepan, we will leave it on that note for today. Thank you very much. Good to have you with us this afternoon. You have a good rest of the day, and we will connect again soon. Time for a break. We continue the market conversation and views. On the other side, joining us is Nilesh Shah, Managing Director at Kotak Mahindra AMC. We get a perspective from Nilesh on, of course, the market setup and the way ahead. Well, it's a bit of a slippery slide now on the street because the Nifty is actually turned into the red from being just about 6 points shy of the all-time high mark of 25,078. Now profit-taking has taken over. And we are looking at some red on the screen. Tata Steel, Titan, JSW Steel, HUL, Tata Motors, NTPC. These are some of the names on the downside as we're looking at this afternoon trade. There we go. So, yeah, that's Titan. Let's pull up the Nifty intraday as well. Choppy day, and finally it seems the profit-taking is taking over. That's the Nifty. There you go. Rare to see a sell the rally kind of a move, but that's what we've got this afternoon. Nilesh Shah, Managing Director at Kotak Mahindra AMC, is with us. Nilesh, great to have you on. So, interesting times, just when you think the market will keep marching on and the all-time high is a given, there's some volatility. And maybe that's not too bad because, you've been making the point that investors shouldn't get used to just one-way returns, right? But tell us, on balance, this month has thrown up a lot, from fears of a US recession to sudden talk about, rate cuts from the Fed to the yen carry trade issues, and of course, corporate earnings back home. There's a lot that's gone on in August. All things put together, how does it look and where do we stand?
So, Surbhi, if you are a trader, lots of things to worry about. If you are an investor who can take some correction on stride, no need to worry. The India growth story continues to march on. Albeit, one will have to moderate return expectation. Normally, in the past, we were getting hammered because we delivered negative return. My fear this time is that we'll get hammered because we delivered below expected returns. Investors are believing 20, 30, 40% return is their birthright. I doubt if market will be able to deliver that kind of return. So this time, please moderate your return expectation. Go for quality stocks over momentum stocks. Go for high floating stock market discovered prices rather than concentrated holding and low floating stock. And go for reasonable valuation over sky high expensive valuations.
But Nilesh, is a return disappointment a reason that we could see some sort of a market correction? Because this India long-term equity growth story has been sold so well, and rightfully so, that perhaps investors will take it into their stride that maybe we'll have 1 or 2 years of moderate returns, not the 30 to 40% that they're expecting. Is this something that, a miss on expectation, seeing a lower return compared to the past, a reason that we will see a correction in the market, according to you?
So, Rima, there could be multiple reasons why corrections could come. There are enough reasons globally, from US soft landing or recession to Bangladesh to yen carry unwinding. And today I learned that there could be yuan carry unwinding as per Bloomberg, about $2 trillion worth of Chinese corporate investments are lying in dollar assets. And as US interest rate comes down, that money may come back to China. So there will be enough reasons available for correction. But we believe, based on our fundamentals, liquidity and sentiment, corrections are unlikely to be deeper like we saw during COVID time. They are more likely to be what we saw during October 21 to June 22 period, a minor correction, combination of time and price correction. And hopefully, those will be a great opportunity to invest.
Hi, Nilesh. Good afternoon. What about the SME space? Is that a cause of bother for you? There's the social media is going viral about this 12 crore issue that garnered bids worth 2,700 crores odd. Is there a pocket that you'll be considerably worried about?
So, Nigel, there are few things which you don't understand in life, like your wife and like SME.
I agree.
Just give up. There's no way you can ever decipher that. SME Exchange IPO is the world's best performing equity indices. 66% compounded return for last 10 years. It started 3 decades after sensex and it has crossed already 1 lakh mark. Sensex is still poor cousin after 4 decades struggling at 80,000. The kind of issues, Nigel, by you have mentioned, I could never imagine in my life that they will be able to list, get so much of money. Undoubtedly, we have seen power of money in the early 90s, mid 2000s. But we have also seen that once money power goes, fundamentals prevail. In fact, Nigel, in my first job at ICICI, I was involved with OTCI of India, over-the-counter exchange of India. Forget the companies listed in OTCI, the exchange itself went bankrupt. So my recommendation to investors, traders, SME exchange is the best performing indices of the world. But I don't think so they have the best performing fundamentals to justify current prices or valuation. There's momentum going on. There will be few companies who will be good, but majority at this valuation are unlikely to meet investors' expectation.
Nilesh, well said, but I guess, as long as people know their risk appetite, they ask themselves the right question, who's to say? But perhaps the market itself has to be the best teacher. But coming back to the here and now, you said that we're unlikely to see a big correction, and perhaps dips will be a good opportunity to buy. And I think that's something that investors are struggling with. And you tell us, I mean, you folks, the asset managers of India, are getting this wall of liquidity, 30,000 crores, 40,000 crores on a monthly basis. So this question of what to buy, I think this is what's really staring us in the face. And I don't know if there are clear answers. So help us with this.
So Surbhi, we have been following exactly what I said. Quality over momentum, high floating stock over low floating stock, and reasonable valuation over expensive valuation. We have taken some profit out of defense stocks, capital goods sector, infrastructure sector, and we have gone into technology, especially those companies which are leveraging artificial intelligence and machine learning better than their peers. One technology company CEO told us that one person which they are recruiting and enabling him or her with AI is today able to deliver 10 people's work. So obviously the winners will be one which are using AI to deliver better, cheaper, faster solutions to their customers, and valuations there are reasonable. The second sector where we have gone aggressive into buying is consumer FMCG. Election, budget, monsoon, all should be in favor of consumption. And we believe the coming festival season from Durga Puja, Onam, Ganesh festival, all the way to Dasera, Diwali and Christmas should see people coming out to buy, both in urban and rural India. Consumer stock valuations are high, undoubtedly, but they are relatively lower compared to their historical average, and their ROEs are likely to be better. The third sector where we are keeping a watch is chemical sector. They have been going through downturn for some period of time. Unlikely, there was no indication in this quarterly result that that downturn is coming to an end easily. But companies have cut cost. They have increased their plant capacity by re-engineering. And today they are able to compete, albeit without profit, with Chinese dumping. Assuming at some point of time China dumping gets over, then this space could be interesting. And finally, there is banking sector, especially private sector banks. This is one of the rare period where partly due to FPI selling and partly due to valuation derating, many private banks' stock market returns are lower than what fixed deposit return they are offering. I think at some point of time, valuations there will bottom out. There are certain concerns in terms of liquidity coverage ratio guideline, which can impact this private sector bank's profitability. But once those guidelines are settled, I think there will be an opportunity in private bank. So we are exactly doing what I've said, moving from momentum to quality, moving from low floating stock counters to high floating stock counters, and moving from expensive valuation to reasonable valuation.
So, you make very interesting points. We've been noting down all the sectors that you speak about, Nilesh. I want to go back and actually quote to you what a guest told us earlier this morning. And you might actually, know the guest, Manish Dangi, who was managing the fixed income strategy at one of your peer firms, Aditya Birla Sun Life Mutual Fund. Right now, of course, he's doing his own thing. So he's followed the bond markets for a long time. And he made a very interesting argument to us in the morning, saying that, the world over, the expectation is that interest rates will start falling. And typically interest rates fall and bond yields fall when there is a fear of a growth deceleration. But at the same time, the equity market is penciling in at least 13, 14, 15% kind of earnings growth in the US and here in India. So his point was both can't be right. One has to be right, one has to be wrong. So I ask you, Nilesh, what looks like the bigger probability? A deceleration in earnings? Or perhaps there's just excessive fear about a slowdown, which the bond market and the rate cut expectations are talking about right now?
So if Jeremy Powell is as good as Alan Greenspan, he will ensure that bond market continues to believe interest rates are coming down because inflation is coming down. And equity markets will continue to believe that earnings growth will continue to grow because growth is coming. Over the decades, we have seen central bankers communicating this contradictory message to the investors. And Mr. Alan Greenspan was fairly successful at that. Manish's point is absolutely valid. But if you take the time horizon, in some sense, debt markets are backward looking. They will look at what has happened from a growth and inflation point of view, and then they'll try to factor in future probability. I think today US debt market is believing that inflation can come down without growth turning negative. And equity market in turn is believing, which is more forward looking, that growth will continue to be supported by falling interest rates and elevated level of liquidity. So in some sense, both markets can come right if Jeremy Powell can do that fine balancing. I think US Fed chairman has done a fantastic job in ensuring that inflation comes down without US going into recession. He'll achieve a soft landing, which will satisfy equity market, and he will cut rates, which will satisfy debt market.
Explained and put, Nilesh, so that's the ultimate balancing act, right? And you've laid it out that for Mr. J. Powell, the standard is Alan Greenspan. We're going to remember this. So, Nigel, what is it that, you men talk about, the balancing act between the women and home and work? I mean, look at this. That's the real balancing act that Nilesh is also talking about.
No, I'm a little worried because first Nilesh went about that you may not understand a couple of things, that I'm sure my wife is watching this and she's going to message Nilesh later on that the SIPs are done through her account. So I'm a little worried on that front. So let's keep that aside because I think we're in minority. Well, Nilesh, in the last 48 hours, my team has been calling you up and saying, Nilesh, we're going to hit all-time highs. Please join at that point of time. And now you're finally come. I think in the next, maybe either in the next half an hour from here on or tomorrow morning we'll hit it. I guess the markets are waiting for this conversation. Final question though, before we let you go, Nilesh. This SIP flows, we're thumping the table, 23,000 crores of inflows. And there is some, some kind of slicing and dicing that's going on. The net number is not that much. Wanted your comment on that because on the face of it, it looks very, very strong. But then there is some kind of redemptions that are taking place as well.
So, Nigel, my answer does not apply to you. Your SIP should continue.
My SIP is, it's only going to increase from here on. I've given you that commitment a few years ago. And I'm sure, when the kids grow up, they'll say, Nilesh bhai, thank you very much. Papa did well. But tell us, what is your analysis?
So the net amount credited into mutual funds bank account across all scheme is roughly about 22,000 crore a month, which is the gross SIP number. But in the past, Nigel bhai, we have sold SIP and investors have made money. And that amount is roughly about 13 to 14 lakh crore of AUM. Now people do redeem. Everyone is not like Nigel who will stay invested. The net redemption is roughly about 13 to 14,000 crore a month. And hence, gross SIP inflow received 21,000 crore minus SIP old AUM redeemed, the net number is probably 7,000-8,000 crore. Obviously, people save so that they can spend, and which is why at some point of time, net SIP numbers will or may become negative also.
I think the point of debate here, and Amphi did a call to help the media understand this as well. I was on it as well. I think the point that everyone was grappling with is that while redemptions is one part of it, while the SIP continues, you're redeeming something else, maybe from a different scheme, a different fund. That point is well taken. I think the question that still sort of remains a little hazy is what happens when you start an SIP of say 5,000 rupees every month, but next month, either due to low balance in your account, the money simply doesn't go. So, well, at a gross level, you're saying 23,000 crores. Is that money coming in systematically every single month? And I think that's what the confusion was.
No, Surbhi. 23,000 crore is the cash received in the bank account. A person who started 5,000 rupee SIP and didn't give the clearance, didn't have the money, that amount is not counted at all in SIP. So gross SIP is money credited into bank accounts of all mutual fund schemes. Net SIP is gross SIP minus of that 13-14 lakh crore SIP AUM, whatever redemption we have received.
So one word answer, which is a better indicator, gross SIP or net SIP?
So Rima, just don't count redemption on both sides. If you are taking redemptions of mutual funds collectively, which includes SIP as well as some lump sum redemptions, then count them together. If you are doing double counting, then it will be wrong. Total redemptions plus SIP redemptions, no. The total redemption also includes SIP redemption.
Fair point, fair point. So need to keep that math in focus. Many thanks. Great conversation as always, Nilesh. And as Nigel says, now that we've had the conversation, eventually we'll get there. Yeah. These milestones are just a matter of time. And I think investors have learned that. Thank you so much for joining in today. Pleasure having you on the show. All right, well, with that, the markets actually managed a little bit of green again, 15 points up on the Nifty. There's one more stock that's in focus today, and that is CDSL. Now, CDSL turned a bit volatile. ICICI Securities downgraded the stock to a reduce from a hold. So first it fell, and now there's a sudden sort of surge back that you're seeing. Plenty of volatility on this counter today. Let's go across to Vamakshi to figure out what exactly ISEC is saying. Vamakshi, tell us more.
Well, absolutely. ICICI Securities, like you rightly mentioned, has downgraded their rating on this counter to reduce from hold. However, they've increased their target price from 1,118 per share to 1,320 per share. They say that CDSL is an attractive play in the bull market, as we've seen in the past from FY20 to 22. But the upcycle multiples that are being seen now are not expected to sustain during the consolidation period. CDSL is now trading at 59 times one-year forward core EPS and 53 times one-year forward EPS on FY26 basis, and this is in fact double as compared to what we've seen in the past. The price cuts as seen in Q1 indicate that there is a possibility that the company is passing on the benefits received as a part of their operating leverage, and this in turn could limit margins for the company. Increase in cash volumes due to restriction on options would be more likely in intraday and delivery. Now keep in mind that CDSL benefits only on more volumes in the delivery segment, and in fact the delivery as a percentage of total cash trades has been trending downwards from 26% in FY21 to 21 FY18 to 21% in FY24. They also highlight that the risk reward in this counter seems rather unfavorable, and that is mainly on account of peak cycle multiples as well as possibility of lower than expected earnings given a high base for CDSL. So given those factors, we have ICICI Securities downgrading its rating, but they've upped their target price.
Got it. Thanks for that, Vamakshi. For the time being, we'll slip into a short break. More related market news on the other side. Stay with us. Welcome back. Mitesh Thakkar is back with us. Mitesh, what are the buy or sell calls you have for us for a reverse trade in the next few days?
Nigel, About India is trading near the day's high. So that's a BTST with a stop below 29,500 for targets of 30,300. And HAL, surprisingly, isn't showing signs of the correction being over as yet. And I would take a STVT here. Keep a stop at about levels of 47.50. Look for targets of 46.60.
Okay, there's one stock which is flying today, that's Datamatics. Now, this is after the company entered into a partnership with Microsoft, where they will be building AI solutions using Microsoft's Copilot. So this will help the company build customized solutions, AI solutions for their customers. So the street is excited because Datamatics is a smaller company which is partnering with the giant Microsoft. We can't estimate the extent of the financial benefit, but the stock is now locked in an upper circuit of close to about 20%. But just to recap, I think the street would also want to see a pickup in the base business because Q1 was subdued for the company. Their revenues had fallen 4.5% quarter on quarter. On a year-on-year basis, their revenues were flat. And the company had spoken about slowness in the US and the European market, a flat growth in their existing business. So while we try and assess from the company what the benefit of this Microsoft partnership is, even a pickup in the base business is something that the street would await. The stock, though, is very, very excited, up close to about 20%.
Okay, all right. Well, I think we're getting some news coming in from Money Control as well, and we'll try to verify that. The government is evaluating Vodafone Idea's request for a potential waiver of some bank guarantees. So we'll try to get you more details on that front as well. Vodafone Idea is a stock that should come up for you on the screen. The government is evaluating request for waiver of bank guarantees on the upcoming 24,000 crore rupees of deals. So we'll keep an eye out on the stock. For the time being, it's perked up a little bit as we speak. Well, let's get in Jay Bala of cashthekiosk.com, who joins us on the show. Hi, Jay. Good afternoon and good to see you win. What's the view on the index? You keep throwing anything negative to it, but it's just punching back and moving higher. Where are we headed on the Nifty, and what about the Nifty Bank?
Yeah, good to be here, Nigel. We are getting into the end game of the medium to long-term move here, Nigel. The markets are bullish. Like I pointed out last time, it's challenging the all-time highs, but be ready for stomach-churning volatility going forward in the short term and in the next 12 to 18 months also. The markets are going to transpire in some fashion that's like 5% above from here, and 18 to 30% drop in the medium term, and then come back to fresh all-time highs. So that's the kind of trajectory I have in the short term and the medium term. Even in the very short term, I won't be surprised if the markets were to drop to something like 23,820 and then come back to fresh record highs about 25,600. But the very short term, doesn't have to do it, but the markets are still bullish. The broad point and the broad takeaway from that is that learn to bank your profits. If you don't do that, they'll disappear quickly.
Okay, stay on, Jay. We've got more questions for you, but for now, we need to slip into a very short break with the news that it's absolutely unchanged for the Nifty and the Sensex. Nifty up 3 points, Sensex up 20 points. We'll come back with more. Welcome back. Sources to Money Control suggest that the government is evaluating Vodafone Idea's request for a potential waiver of bank guarantees. The bank guarantees amount to close to 25,000 crore rupees. So this will come in as a relief. It's not a cash flow impact, but it's a waiver on bank guarantees. And perhaps if that's waived off, then it paves the way for the company to go ahead and raise some more debt, which it wants to do. They've managed to complete the equity fundraise, via the FPO, which was very, very successful. But the company also plans to additionally support its, bank balance with a debt fundraising. And now it appears, what sources to Money Control have picked up is that maybe Vodafone Idea has made a request for a potential waiver of the bank guarantees amounting to 25,000 crore rupees. And the government, which is a majority shareholder in Vodafone Idea, is currently evaluating and considering this request. The stock is up about 1.7%, moved up a bit. But the other stock on our radar is MediAssist. This is after the company acquired Paramount Health Services for an enterprise value of 312 crores. Yash is here with the details. Yash.
Well, Rima, it's quite an interesting transaction which MediAssist has entered into, quite strategic for the company. MediAssist has announced acquisition of about 100% stake in another TPA company, that is Paramount TPA. The deal is done as an enterprise value of about 312 crore rupees. When you look at the equity value, it is upwards of 400 crore rupees. Now, just to compare this particular acquisition, that is of Paramount TPA, to the other acquisitions that the company's made recently, Paramount TPA is 3 times the size of Raksha TPA, the last transaction or the acquisition which MediAssist made. It is 7 times the size of MedAdvantage, which is another transaction made recently by MediAssist. Paramount TPA deal is valued at 2.5 times sales versus Raksha TPA that happened at 1.7 times sales, and MedAdvantage which happened at about 1 time sales. Of course, the company is much larger and the valuations are a little more than what the 2 transactions happened at. MediAssist itself trades at 5.2 times sales and 47 times enterprise value. So that way, the valuation at which Paramount TPA has been acquired is quite favorable to MediAssist as well. What does Paramount TPA bring on table for MediAssist? First one, Paramount TPA is the second largest TPA in the group segment as on FY24. It adds significant amount of market share to the current market share of MediAssist, adding about 6% market share in the group segment, taking it to 36.6%, and adding 4% market share in the health insurance segment, taking it to about 23.6%. So, of course, significant addition to market share, attractive valuation at which the transaction happens, and fits well in what the company intends to do in the group insurance space.
Okay, all right. Yash, thanks a lot for that. We're still in conversation with Jay Bala. Jay, before we continue talking about the equity calls, what about crude? That's moved up again to around $81 per barrel, and that's the fear, right, with that geopolitical tension in the offing. What's your take?
Yeah, Brent is setting up for its medium-term drop towards 55 and probably below 55. But in the very short term, we could see a further bump up close to 82.5. Maybe yesterday's high was the counter trend bounce, peak, maybe there's one more high coming to about 82.5. But as soon as the 76 important support on Brent is taken out, it confirms the medium-term opinion that I've been having, that it's dropping towards 55. But so, expect slight bump up in the very near term, but, it's set up very well for a sharp decline towards 55.
Any interesting stocks which catch your attention, Jay?
Yeah, I've gone this time outside the mainline indices, and there are 2 stocks from the mid and small cap space. One is Autoline Industries. This is breaking out of a inverse head and shoulders pattern on the monthly time scale. So placing a stop at about 120 and a price subject close to 240 is possible. And the other stock is, again, Kaitan Chemicals and Fertilizers. This is consolidating after a sharp decline for the last 1 year. And it's breaking out of a pattern, what looks like a cup and handle pattern. And if it is getting back to where it's heading, I think it's heading for something like 160. With a stop loss at about 78, 72 will make a lot of sense. But these 2 are quite thinly traded, so position size yourself accordingly.
Jay, just quickly, NASDAQ, next levels you're watching?
Yeah, I'm watching the all-time highs at about 20,100 and change. But what is significant is that the semiconductors within the techs have started to underperform, while the blue chips have come up to record highs. So watch out for it. You have NVIDIA results coming up day after tomorrow. So you might want to be a bit cautious on frontline techs. But I think higher highs are due. But it's all with a bit of caution.
Okay, all right. Jay, appreciate you stopping by and giving us your view on the indices, commodities, as well as on a couple of stocks as well. Wishing you a good evening ahead. Well, before we wind up, just want to focus on a few stocks. We have Hindustan Copper, Manappuram and GNFC. I think these will go back into the F&O band going by my calculation. So keep an eye out on all these three, Hindustan Copper, Manappuram as well as GNFC. And the possible exits from the band, well, we could have ABFRL, IEX and Aarti Industries. So keep an eye out on all these three stocks. Three could go in and three potentially could come out as well. But it's that sort of a session. Well, we thought we were almost there. Unfortunately, the market slipped a little bit. So we have to wait a little bit longer. But all good things, test your patience. Stocks that didn't do well from the Nifty pack today. JSW still came in for profit breaking. That was down close to 2%. A couple of these notable higher value stocks like HUL and Titan. Great business model, but valuations a little bit elevated. Both those two were down close to 2%. Coal India as well did come in for some profit taking. What did well then? Some of those financial names, Bajaj Finserv, SBI Life, HDFC Life, Shriram Finance, all of them were up between 1.5% to around 2.5%. So that held one end up. The positive today was the mid-cap index was an outperformer, up close to around 0.5% or thereabouts. The Bank Nifty yet again went all the way to 51,350 and did a bit of a U-turn from those levels.
Okay, well, let's look at what worked in mid-caps because that's where the outperformance really was. NIIT, another 13% on the upside. MediAssist, the acquisition that they announced, well received by the market, 8% up over there. Dilip Bilkon had announced a small contract win, a small award, 7.5% up on that stock. And by the way, today, a lot of the pain stocks have actually done well despite the acceleration in crude oil prices. Look at Akzo Nobel. 7% up on that one stock. Even Berger is up about 2%. Kansai is up about 1% as well. So not much sort of worry on the crude up move, so to speak. Let's look at what else worked for the market. The gainers tally included names like Tata Elxsi, 16-17% now as the bell goes. Tata Investments, 20%. CESC, 10%. Tejas Networks, 6%. K Fintech, almost 14%. Such a long list of winners, really. I could just go on and on. Kaplan Point, 6% on the higher side. So big list of winners. Subros, 8%. So even though the market was very range-bound, the action was choppy at the headline index level. Some of these movers shakers managed plenty of gain. Office, the recent listing, has been cooling off. Of course, it's had a great run. The stock was a sort of doubler recently. But after doubling, it started correcting, and that continued today, about 3% on the lower side over there as well. And some red, a little bit of red on the oil marketing firms, BPCL, HPCL, IOC, with the rise in crude oil prices. So the bell has gone, the day has ended, and the final tally is about a 14-point drop on the Nifty. So all-time highs, well, they'll have to wait, perhaps, at least not today. With that, we will wind down on this edition of Closing Bell. Thank you very much for joining in. We'll take all the action forward, markets forward, coming up next.